Okay, welcome to how to optimally design your price ladder workspace. Now, this is really critically important for extracting the most information in a particular market or your core market that you're trading. And what we're going to look at this video is we're going to be looking at how to design your everyday, day in, day out core price ladder workspace, and really it's how to optimize your real estate, your desktop real estate that you have in order to extract the most information from a particular market that you are focusing, or particular couple of markets that you are focusing. Some traders trade up to 8 markets. A lot of the very large intraday traders and very large and specific markets only focus on 1 or 2 markets, and some guys who trade in 100 lots to up to a couple of thousand generally just focus on one market. So the video is going to be looking at the core market. Then we're going to be looking at how to set up your workspace for trading central banks and the central bank events, and then we're going to briefly speak about how to design your price ladder workspace given the theme that's running through the market, or the geopolitical themes that are running through the market, such as when the financial crisis and the subprime crisis was happening, or the European crisis. And that's what we're going to be looking at in this video, for you to see how you will design your own personal workspace. Remember, this is just a template. You can design from there, and as you develop as a price ladder trader, you'll start just making and tailor making it towards yourself more ideally. So let's now have a look. So I actually trade the European German bond curve. So with trading the European German bond curve, well, I've got over here in this screen, I've got the Bund market. So this is really my main market that I trade, as you can see. And I've got it really nice and big, really bold, so I can see the bids and the offers clearly, and the price clearly. And I can see the volume profile along the ladder, as well as seeing how much has been trading at each price. So all very important. And then I have my time and sales, and because this is late in the evening on a Friday night, we've only had one order of above 50 lots, so I actually have my minimum order size of 50 lots. If I were to change that at the moment, so if I were to change that and make it 0, you would see the orders come through. So as 7 lots goes through, you've seen that 7 come through. So the next order that we see come into the market, and maybe it depends how long we have to wait, as it is a Friday night and the market's not trading with great. So there, 20 lot, you can see it just gone through, and a whole bunch of different orders just went through now. So 20 lots went through at 161 at 10, another 1 lot now at 161.09. So this is my core market, the Bund. And now next to the Bund, now the most important part is how do you extract information from markets that are very closely correlated. So what I do is I make sure the correlated markets that are effectively going to affect my main market will be in very close striking vicinity. So what I have over here, I have the German 5-year, so that's the bubble contract. So I've got the 10-year German paper. It's the interest rate market. You'll know if you do our Zero to Hero course, our introductory course, you'll understand what the interest rate markets are. And so over here I have then the 2-year paper. It's called the Schatz. So I have the 10-year, the 5-year, the 2-year, and I don't have the 30-year now because I don't actually look at it too much, except if we have some really big curve plays, but that's beyond the scope of this video. And then next to the Bund, I have the main equity index of Europe, equity futures index, which is the Eurostoxx, also one of my core markets that I also trade. So you can have the Eurostoxx. So if we have a theme where there's a broad risk on or risk off theme, you generally see the Eurostoxx, or if it's a risk on, bidding up, and the bonds selling off as there's a risk on or a lack of flight to safety. Then I have the Treasury market. Now the Treasury market is the global benchmark really for government bonds. So I have that right over here, and I have the 10-year market, the 5-year market, and the 2-year market. So the 10, 5, 2s, just like the German, the 10s, 5s, 2s. So I can start seeing how they're reacting to each other. If I see a very big move in the treasury market, then I expect a move to start happening on the Bund. There are very strong algorithms and arbitrage algorithms out there. So normally, as the T-note reacts, so will the Bund. But sometimes you get delay, or sometimes the T-note is going up, and then there's someone sitting on the offer or a potential iceberg, which we look at later on in the module, and someone keeps on selling, which means that there's a potential spread going on between the two markets. So again, the 2, 5 year and 10 year of the German curve, and then the European curve, of the US curve. Then what I have are the 10 years of the French market, what's called the OATs, and over here the Italian market, the BTPs. So already, as you can see in this picture, I've got my main bond markets so my core market being Germany, then the US, then the Italian 10-year and the French 10-year, because those, as markets orders go through in those markets, they can influence my market. So I just want to have that awareness of markets that are most closely correlated to mine. I have them in very striking vicinity. And then I have my Euro Stocks Index, and then I have my Euro USD. Remember, so I'm trading European products. Because I'm trading European products, I want to have to be able to see what the dollar is doing, but more specifically what the euro is doing in the financial space. And then I have one of the main equity indices of the world, the American. I always have on all my platform, I'll always have a US equity index, and the main one being the E-mini S&P 500 futures. And then to get a broad understanding of what's happening in the dollar space, I have cable, which is 6B, I have the yen, and I have the Canadian dollar and the Australian dollar. So these are your so-called commodity currencies to see what's happening if you're seeing a broad move in the commodity space. And you can extend this beyond, and also have gold and oil. I don't have it on my Pacific chart. I don't trade those markets as often, but this is generally my setup. And the most important, you'll notice, when you look at the setup, you think, oh well, it all looks very confusing. But the human brain is incredible, and the human brain over a period of time starts putting all of this into really one picture, and you'll notice quite quickly how your peripheral awareness really starts picking up. You'll notice a little move in the shats, or the shats going offered as there's a potential repo market unraveling, or short-term debt collateral in Germany is being affected, and then you start seeing a move in the Bund. All of a sudden you start seeing a spike up in the Japanese yen, and as a result of that spike up in the Japanese yen, so the yen is strengthening, and if the yen is strengthening, you will potentially get if it's a yen that's strengthening against all the other currencies, then all of a sudden you might get the Euro stocks weakening, and therefore you have a potential risk-off play, and then you'll see the bonds start going up. So you start picking up all of these little patterns. All of a sudden there's a big speak out of the USA, such as Fed's Dudley or Yellen, and they say something that will affect the treasury market, that they'll raise rates next month. You'll see a big offer in the 5-year paper, and the 2-year paper, and the 10-year paper. And as a result of that, I've noticed this big move. As a result of those comments, I can get on a short in my main core market. So this is how I set up a core market, being when I'm trading the interest rate market. Now, if you're trading the Euro stocks as your exclusive core market, then you'd have your Euro stocks over here as the main page. You'll have the S&P 500 right next to it, as it has a strong correlation. When the US global equity markets move, they cause a ripple effect around the world. And then you can have the DAX next to the Euro stocks, because the DAX and Euro stocks should move more or less in sync. And then you can have your bond markets and your currencies like I've set it up. So depending on what your core market is will determine how you set up your main area. But this is for setting up if you're trading the European bonds market. If you're trading the treasury market, well, you might actually have here, if you're trading the 10-year paper, you'll have the 10-year as your main market over here. And then you'll have the 5-year and 2-year and the 30-year perhaps. And then you might have the euro-dollar curve, which is a short-term interest rate market out of the US that's really priced along the Fed funds rate, and then which we'll be looking when we set up our FOMC space. But that really just gives you an image of how you can manipulate according to your core market. But the most important consideration, really the most important consideration is whatever your core market is, just make sure that you have the markets that are most correlated to your core market that will affect movement. And as you gain more experience in the markets, you'll know exactly how to optimize and set this up. And this is just a really basic introduction to setting up your workspace if you're trading the European German bond market. Now let's start clearing this all up. And now let's look as if you were trading a central bank event. And just to let you know, for trading the ECB, so the European Central Bank, I would pretty much have exactly the same template as I have over here, because I get all my information. If the ECB move on rates, I'm going to get moves in the 2-year paper, the 5-year paper, the 10-year paper. But what I might add is I might actually add over here the Euribor, which is the European short-term interest rate market. So I might add the December, so we now in the moment we started December 2016, so we might have over here the Euribor curve starting from every 6 months or every year, just so you can see how the curve is affected by the ECB. So that's the one difference I'd have on this page. I still have all the European bond markets, the euro dollar, very important, and I might take away I'll take away the ZN, so the treasury market. So we'll take away these over here, and what I would do is I would then include over here the Euribor short-term interest. So therefore, when I'm trading the European Central Bank, I'm very well prepared for trading that market and getting the most bang for buck information, because the interest rate from the central banks can affect the entire European bond market as well as the equity market, and you want that as your main source for when you're trading the ECB central bank. Okay, so now let's have a look at if we were to trade the FOMC central bank, and you'll use the same type of common template like I've just explained over here. So let's just look. I've just got another workspace over here. This is actually a demo workspace. So let's just have a look right here. And so how I've prepared this, if you're trading the FOMC, which is the Federal Reserve Bank, of the USA. So how you would set this up is if you're trading, generally the most sensitive markets are going to be the interest rate markets in the USA. So the markets that you would have up, I would have whatever your core market that you're going to be trading on the day of the FOMC. You have a chair and you elongate the market. So you elongate it so you can see what's going on the book, and if the market moves around. And what I'd have here is this is the 10-year market. Then I have the 30-year market over here, the 2-year market, the 2-year treasury, and the 5-year treasury. So 2, 5, 10, 30. So I can see the entire curve and how the various parts of the curve are affected. So for example, if they come out and they surprisingly increase interest rates, you'll get the 2-year moving the most, followed by the rest of the curve, as the 2-year is the most sensitive to moving interest rates. But this is what we discuss in the other course. We're just showing you how to set up your price ladder space. Then what I'll also have is I'll have the short-term interest rate market. So I'll start with the December 2016, so the nearest month. And then I'll move another 3 more months later, and then I go for every DEC contract, DEC 18 up until DEC 19. So effectively going 2 years out on the short-term interest rate market, because these will be highly sensitive to surprise rate moves. And when you see the way this curve moves, how this curve moves will effectively have the influence how this curve moves over here between the longer dated papers, such as your 2-year, your 5-year, your 10-year. And this is how you want to set it up really for the FOMC. And then this is what we've just done here. We've just looked at how we'll set up the interest rate market, and then I'll have the American equity market. So if we look over here, I'll have the S&P 500 index right here to see how that's influenced by the FOMC and the rate decision. And then I'll have the euro dollar, so a currency. I'm just using one currency here, so I can get a broad picture of how this is affecting all the asset classes from the FOMC rate decision. And then I'll have 2 commodity markets. I'll have gold, and I'll also have crude oil. Now the reason why we have these is because sometimes one of the asset classes actually moves quicker and moves truer compared to the other ones. And gold has been known for the last year to really move first in the direction of the rate announcement, and if the market doesn't like what it's heard from the FOMC and decides to reverse, the gold is generally known to reverse first, and then all the other asset classes start following. But this is what the little patterns that you pick up over time, and these little nuances that you'll develop. So this is how you'd set up your FOMC paper. This nice squiggly bit of painting that I've created over here. So finally, what I wanted to tell you, so we've looked at how you'd set up central banks, and it'll be the same for the BOE, the same design, looking at the UK gilt market as well as the FTSE 100, almost exactly the same template, except you substituted for the UK assets. So instead of having the 10-year note, you have the gilt market, and you have the short sterling market. You have the FTSE, but then you can still have gold and oil, which are more globally denominated commodity markets. Now, for geopolitical events, so we won't look at a workspace, but I'll describe it over here on this side. Excuse me. So, if there is a theme that's running rich in the market, and for example, you trade. Your market that you trade is the Bund, and we're having a housing crisis in the USA, the financial crisis. So what you want to make sure is, if that's your core market, you want to make sure you have the S&P 500 right near there, perhaps the Dow Jones, the mini Dow Jones. You want to have the Japanese yen to see the risk theme. So you've got the Japanese yen over here, you've got the S&P 500, and you potentially have a commodities market, and then you also have the treasury market. So the housing crisis is happening in the USA, so therefore the most sensitive assets are going to be the American markets. So you will have, for example, the treasury market over here, and as news breaks out or the markets are being affected, these ones will be affected first. And as a result, you're trading on the back of the markets that are most sensitive or most correlated to the geopolitical theme that's going through the markets. Now, if during the European crisis, the markets that were being affected the most were the peripheral bonds, the Greek bonds, the Italian bonds, the Irish bonds, the Portuguese bonds, but on the ladder, on the futures market, we have the Italian bonds. So next to the bond, you'll actually have your what's called the BTP ladder, which is the 10-year Italian paper. And so that's going to be very close. You're also going to have the euro-dollar currency, because that's so important as the European crisis was unraveling. So as certain events do occur in the marketplace, and as certain geopolitical events are really moving the market, make sure you adjust your workspace accordingly so you gain the most information as close to your core market. So this is where you do the adjustment. When there's no theme running through the market, then you just have your normal your normal workspace. So always remember, always make sure that if there are big political themes or geopolitical events that are moving global asset classes, to adjust your workspace accordingly. So as the Greek crisis or the Japanese tsunami, when the Japanese tsunami was happening, you wanted to have your yen incredibly close to the bund, because that was a market that was affecting global assets around the world. So this is a brief introduction to how to set up your workspace, and with the objective to gain the maximum information from markets that are going to affect your market, that your market is highly sensitive to, and also understand of how to trade correlated strategies. That's something that we talk about in the other programs and our other training courses. But when you can see a correlated market moving, you can potentially see an absorption pattern on your ladder as the correlation breakdown. So thanks very much, and I'm really glad that you have now done this part of the video, and we will be asking questions.